Once again, it seems like we're headed in for a quiet start, although there's been a lot of news flow overnight. The tariff news flow clearly continues. I'll talk about the US markets and how they reacted to in just a bit. But firstly, Trump has finally unveiled tariff rates. He slapped 25% tax on major allies like Japan, South Korea. And because of that, you had quite a bit of rumble on the US equity markets overnight. I mean, to be fair, they were also opening after a long gap. Remember, Friday, 4th of July was a trading off, and then Thursday was only a half day for US equity markets. So after a long haul, but yes, they didn't quite receive the tariff news all that well. Also, Trump has signed order to extend the tariff deadline to August 1st, which was very much the talk yesterday as well. And yeah, all Wall Street major indexes have actually pulled back from those record highs that they were sitting on. In fact, the reaction, while it may not be as acute for most of the Asia markets, but for Japan, of course, it started off with a tumble, and from there, it's managed to recoup some of the losses. So it seems that sooner or later, we are going to finally get in the tariff news flow, which was the big uncertainty for the market.
Sasha, it's a little bit of this and a little bit of that. Everything is not as bad as what, let's say, appeared in the beginning of April, and be able to stitch up and there would be a deal in making. So yes, progressively, there are two names which stand out. One, there is a deal with China. And second, there is a big tariff which has been imposed on Japan. These are two large economies, two large trading partners. And in terms of market terminology, you would say Japan's got a higher tariff. China has managed to negotiate. India, well, nothing's come officially from the US administration, nothing has come from Indian administration. What we understand is that, look, a mini tariff deal would be in work. If you read in between lines the comments which have come from the US president, it appears that the deal is in the works now. Like, if there is a deal in works, that is not going to have an impact on the market per se. From a market standpoint, this is not going to have a large collateral damage, but from an excitement standpoint, there's no new excitement which will be building up. Markets are solely focusing on what could be called as the impact of liquidity in the medium term, which is because of the tax cut, which is because of earnings, and which is what could happen now that crude prices and yields have come down. So the playbook, I guess, for next couple of days, at least for global market, would be look beyond tariff, understand the impact of liquidity, and for Indian markets, it could be all about flows, IPOs, earnings, and technical levels again.
Yeah, and that's really been the case for our markets as well. We've been very, very range bound, so to speak, for the last many trading sessions. And yesterday was no different. At an index level, we were absolutely flat. In fact, from the high to the low of the day, we barely even nudged the needle. While FMCG, of course, reacted to its quarterly updates. You had a big move come in for Godrej Consumer. Dabur, even though the quarterly update was in line, the stock managed to hold out quite okay. Unilever, Tata Consumer, Nestle, the entire pack did quite well. But other than that, there were really no shining stars in the market yesterday. In fact, at best, there was severe amount of profit taking, which was at play in some of the select pockets like defense, for instance. Some of the names like BEL, some of the technology names ahead of TCS's numbers on Thursday post markets. All these stocks were a little bit on the back foot. But I'm